Do you want to learn how to build wealth like a pro? Well, one of the things that stops people from buying real estate is they think you need a ton of money when it comes to investing in real estate. Okay, so what we're going to go over today is we're going to go over what the BRRRR strategy is and how you can use it. And basically what the BRRRR strategy is, it is a method that you can use to go in and get a property, force equity, and then refinance and essentially get out of the property without having your own money in it. And that might sound complicated, but it's not as complicated as it sounds. I'm gonna break this down for you. So what BRRRR stands for is buy, renovate, rent, refinance, repeat. So we're gonna go through the individual steps and walk you through how this basically works. So basically, using the BRRRR strategy, what you do is you go find a property that needs some renovation, that you can buy at a deal, that you can buy under value, right? And so what you do is you go buy this property, and hopefully what you can do is you can go get private money, go get a private lender to finance this deal so you don't have to come out of pocket. Or let's just say you're first starting out and you don't have any money. If you can find a good deal, then you can team up with another investor, because investors are all about finding good deals. So if you can find a good deal, you could bring it to an investor and say, hey, I found this good deal, team up with me and let me get some equity on this. So that's what I did when I first started in real estate, because I didn't have any money. So let's just say, let's walk through this. Let's just say that you do that, you find the property and you buy it. And what I tell everyone is, especially when you're first starting out, you don't want to buy anything that is like super crazy renovation where you could go over budget or it's just out of your depth. So what I'm saying is you're going in, you're cleaning it up. It's carpet, it's paint, it's basic stuff. Maybe you're putting the kitchen in, maybe you're spicing up the bathrooms, but nothing major. Like if you don't understand how to renovate properties and you're new to this, don't go in and try to take on some major crazy renovation on your first one. You're just not equipped for it. You can get there later, but don't do that in the beginning, okay? So then you're gonna find something that's undervalued. And so like for instance, let me give you simple math. And I know in some parts of the country, if you hear this, you might laugh, but let's just say you could buy a property for $150,000. and it cost you, simple renovation cost you $50,000. Now I know that sounds like a lot of money, but let's just say it's carpet, it's paint, renovating 2 bathrooms and a kitchen. Just simple math, we're using $50,000. So now you spent $150, you put 50 in it, you got $200,000 in the property. And the equity though increases that property is now worth $250. So you instantly got $250,000 worth of equity. Or I'm sorry, $50,000 worth of equity. But let me break down how all this works. This is just the example. So you buy the property, you then renovate it, and then you rent it, right? So you put a tenant in there, right? And if you watch other videos that I talk about, you want to meet the 1% rule. So if you have got a $250,000 rental, you want, meaning the property's worth $250,000, you want to get $2,500 for it. Now, if you are only borrowing $2,000, that 1% rule only needs to be $2,000, right? If you're borrowing $200,000, 1%, $2,000. $250,000, $2,500. But follow me on this. So you rent it and then you refinance it. So we've bought the property, we've paid $150,000, we put our $50,000 in, it's now worth $250,000, we've now secured a tenant, we've rented it, now we go to refinance it. So what's gonna happen is the bank is gonna refinance it based on its current value. So this is the trick and this is the beauty. So let's just say you've got $200,000 in the property and the bank's gonna loan you 80-20, meaning they are going to give you 80% of the current property's value. So take the 20%, so let's just say from the 250, they're gonna loan you 200. Well, you've got 200 in the property. So what happens is you get your 200 back, whether you did a joint venture, you got private money, whatever you did, right? So now you've got 200 on the loan, the bank's giving you the $200,000, you've got your money back out and you could be in it $0 out of pocket. So follow me on this again. Let's just say that you did a joint venture with an investor and they put the $200,000 up. Or you went to a private money lender and let's just say they required you to put 20% down in order to get it, and you got an investor to put that 20% up, and renovation costs, all that kind of stuff. So you guys have $200,000 some way in the deal, right? So you need to get your $200,000 back out. Well, when you go because you've gained the equity and it appraises at 250, then the bank's going to give you your 200 back. So think about in that situation, you clear all your current debt and you now own the property with $0 of your own money in it. That's the beauty of BRRRR. Then, so you go through, you refinance it, you get permanent bank debt on it, right? And so you're going to get some type of DSCR loan with fixed debt on it, then you repeat it. So by doing this and understanding you can rinse and repeat, you can consistently get in and out of properties, right? And in the property for none of your own money and own a rental that's cash flowing. Now again, from the rental standpoint, going back to the 1% rule, it's only going to make sense and a bank's only going to lend you money if it cash flows. So the 1% rule is something you need to follow, meaning, again, $200,000 loan, it's got to rent for at least $2,000 to cover the debt service ratio because that's what a bank's going to look at. But this is one of the easiest and best ways to grow a rental portfolio. And even when you get past the point of financially you're stable where you could do this with your own money, the BRRRR is a great way to do it because if you think about it, why would you not every time you can get a rental property where you have $0 of your own money in it by using the BRRRR strategy where you're using all the bank's money and the tenant is paying the debt down for the property, and not only that, you're coming into it day one with equity. Now, obviously you have to understand and have some knowledge of the market of, right, buying it right, what you need to renovate versus what the market value is going to be afterwards to make sure that you're always hitting those spreads so that you don't have money left in the deal. But this is one of the ways that you can grow a rental portfolio and build a rental portfolio where you don't have to come out of pocket every time, of your own money. And then as you start to grow and get better at this, and let's just say you start to build your own capital, you can put some of your own capital up in the beginning, then go get bank financing to refinance out, and then end up with none of your money in it. So that's the really cool thing, because then it leaves you with your capital to go reinvest and put into other real estate deals or whatever the case is. But it doesn't, the one thing that people run into and they have issues with is when they build a real estate portfolio, they run out of money. Because, you know what I mean? If you don't have infinity amount of money, you just can't keep buying properties and putting your own money into it because you'll run out. But using the BRRRR strategy, you can continually do this over and over and over again, right? And continue to build a portfolio without having a bunch of your own money in. So this is one way that you can do it. And I've myself done this, and plenty of investor friends of mine and people that I've coached and taught how to invest in real estate use this strategy. So if you're out there and you want to learn more about this strategy, certainly check out more of our videos. Check out my podcast, Wake Up to Wealth. Stay tuned in, stay following me. If you even want to go even further, I've got all kinds of educational courses, coaching, things like that, where I can take you through the process and teach you everything that we know when it comes to investing in real estate. But if you're out there, and it doesn't matter what level of investor you are, the BRRRR strategy is a great way to build a rental portfolio. So one of the things, if you're listening to this, you're probably concerned with is the loan side of getting a loan from a bank. So there's a lot of DSCR lenders that are out there. That is a debt service coverage ratio lender that will lend you money based on the deal and not necessarily all of your financials. Now, you've got to have a certain level of credit, right? So most DSCR lenders are going to require a 620 or higher, and the higher up you are, the better rate that you're going to be. But they're going to base it off the rent. That's why we say the 1% rule. And they are going to base it off your experience. So if you are brand new, transparently, it may be harder to get your first loan, but it won't stop you. But this is very different. And if you're out there and you're paying attention to this, reach out and I can get you in touch with our DSCR lenders. You're a typical bank loan. They're going to want your tax returns. They're going to want your work history. They're going to want all kinds of stuff. Where a DSCR lender it's going to be a lot less painful to go through than your traditional bank. So my suggestion is you go the non-traditional DSCR lender, because it's going to be way less painful of a process. And they are going to check your credit, and they are going to have someone who has some type of minimal liquidity requirement. Meaning you've got to show them that, if something goes south, you've got some liquid in the bank that you could help, and you could help pay for the property, if it goes unrented or whatever the case is. So in the beginning, if you have some issues with this and financially maybe this doesn't work for you, then I would partner up with somebody, find a local investor in your market, or team up with somebody else who financially maybe is in a better position than you are, but maybe they don't want to run the real estate deal, they let you do it. So, but the biggest myth is you got to go through this whole bank financing process, which couldn't be further from the truth, because the DSCR that's out there now, which a lot of people are unaware of because it's a newer product, is a great way to go when you're leveraging doing these BRRRR models.